Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. We bring you the information. You do your own research. Today, we have part two of an explosive interview that started last week with gold, and today we're going to be talking silver. I'm welcoming once again to the program the CEO of Miles Franklin Precious Metals, Andy Schectman. Great to have you back on again.
Good to be back, Jess. Looking forward to picking up where we left off, brother. Thanks for having me.
Absolutely, I am as well. Let's talk about silver. Let's kick it off with a broad question. You can take this anywhere you'd like. What are the main themes and trends that you're currently watching when it comes to the silver space that you think more investors should be paying attention to?
The drawdown in supply, really, from the LBMA, who tells us it's the second lowest amount of silver that the the London Bullion Market Association, don't want to say LME, the LBMA, because they're different. The London Metals Exchange, the Chinese own, and those are the base metals. The LBMA would be the silver and gold and whatnot. And they tell us it's the second lowest amount of silver they've had in their inventory since they started keeping records. It's a 140-year-old institution. We've seen massive drawdowns out of the COMEX, off the ETFs, and even out of the Shanghai Metals Exchange. It's very interesting that when you look at the price, currently there are 8 banks, that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market. Why? Why would 8 banks be stepping on the price of silver that much? Or the LBMA, who tells us they trade 290 million ounces of silver per day, but say that those numbers are 10% understated, 10 times understated from what is actually traded, just the settlement numbers. But the trading is 10 times greater. That would say 2.9 billion ounces of silver is traded in London per day. That's 3.5 times annual global mine supply. Now, the LBMA says they're very low on silver. They have 800 million ounces, period, of which over 500 million belong to the ETFs, leaving 300 million ounces there, yet they're trading close to 3 billion ounces per day. So between the 8 banks on COMEX, which control the largest concentrated short position in any commodity ever traded, or the LBMA, which is trading up to 3.5 times annual global mine supply every day, should tell you that the real price for silver is, well, heck, no one knows what it is. And when you see central banks like India, who in the last 2.5, 3 years has bought over 700 million ounces of silver, and already here in 2024 bought more silver than they did all of 2023 in the first 4 months of the year, and now bought a whole bunch of silver recently, billions of dollars worth, from the United Arab Emirates, because they have some deal in trade with them where they don't have to pay as big of an import duty. Silver is something that is a strategic asset, not an industrial, as all of us want or are told should be. But as far as I'm concerned, it is the drawdown and the accumulation by the biggest money in the world. I want to read something to you because when we talk about the supply-demand fundamentals, the Silver Institute publishes numbers, and those numbers have showed a 250 million ounce or so shortfall in between supply and demand over the last few years each year. And so, in other words, there's more demanded than is coming to market. And when you look at the supply-demand numbers out of the Silver Institute, what they say is the demand is industrial, electric and electronics, of which photovoltaics, that's solar panels, other industrial, photography, jewelry, silverware, and that's it. Now, I want to read you something, and I owe this to John Little of the Pickaxe. He's a hell of a researcher. He wrote a report a while ago in which he lists something and shows, people can Google this. It was a hearing on October 14th, 1942, and it was a subcommittee of the Committee on Banking and Currency of the United States Senate. And it is S.2768, a bill to authorize the use of silver for war purposes of silver held or owned by the United States. S, as in Saturday, .2768. Read it for yourself. But I just want to read you the first two paragraphs, all right? And I want you to think about what is missing from the supply-demand fundamentals that we are told by the Silver Institute, showing us a 250 million ounce shortfall, right? Okay. This is dated October 14th, 1942, and you can find it when you Google it. I did. The present consumption of silver for war purposes is at the rate of about 100 million ounces per year and is growing rapidly. According to the War Production Board, it is only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces of silver per year. Now, John Little does, about the massive amount of silver used in all this high-tech weaponry. I have a client who is a consultant for the Department of Defense, and 2 years ago in Vancouver at VRIC, I made a statement that there's 500 ounces in the tip of a Tomahawk cruise missile. And he came up to me and he said, I work for the DOD. I helped design the Patriot and the Tomahawk. I know there's silver in it. Don't know how much. I'll get back to you. Never heard from him again. I see him this last year in January, and he says, I'll be damned. You're right. There is between 13 and 14 kilograms of silver in the tip of a Tomahawk. And he says, he shows me all sorts of pictures that he said were just that had been declassified and all sorts of stuff. But my point to you is this. In 1942, we were on the verge of using 200 million ounces of silver per year, and for military applications. And now we're supposed to believe that with all the high-tech weaponry, that there's no silver in it. The Silver Institute omits completely and totally military demand. So we have a situation where, ask yourself, why would 8 Western commercial banks suppress the price the way that they do? The largest suppression, the largest concentrated short position in any commodity traded is in silver. The largest. Silver, we are told, is used in military, but they conveniently stopped talking about that and stripped it out of the supply-demand fundamentals. The military-industrial complex is pretty damn powerful, maybe more powerful than the present, probably so, probably pulling the strings, the people up there. Do you think they want silver to build all of the missiles that they are selling all around the world and or to the U.S. or to the rest of the world? Do you think they need it? And if silver were really known to be so integral to military applications, do you think it would be as cheap as it is? Do you think there's any coincidence that India has bought, literally going on, if you add what they bought from United Arab Emirates and what they bought from the West, from what they told us, you're getting close to a billion ounces of silver in the last 3 or 4 years. China is the largest producer of silver. You don't ever hear them talking about it, but they are, number 2. Mexico's number 1, China number 2. Silver is the trade of a generation. It is the value of a generation. And if it weren't for these Western banks that are holding down the price, it would go parabolic. Now, what's different? What is different right now is that you, for the very first time, have sophisticated, coordinated, and wealthy governments acting maybe by proxy through sovereign wealth funds and bullion banks that are draining the exchanges of the LBMA and the COMEX and backdooring out of the ETFs and even the Shanghai Metals Exchange. And they are loading up on gold and silver. But in terms of silver, this is how they win. They look at the brain-dead suppression of the West to achieve an illusion that silver is cheap so they can continue to fund the beast of the military-industrial complex and the hundreds and hundreds and hundreds of wars that we've been involved in, or they have been involved in terms of supplying munitions for the last several years. It's the key to it all. Why would it be omitted? Why don't they talk about it? Why are these banks as dumb as a mud wall in a rainstorm suppressing silver at a time when all of these other governments are buying it? What is different now than in all of my career is that over the last few years, you have countries and sovereign wealth funds standing for delivery. They never did that before. 1% or less stood for delivery. Now they all do. This is how they win. Thank you very much. I don't care about positive real yield. I don't care about the strong dollar. I don't care about any of these relationships Just give me the silver. And if you look at the drawdown in the LBMA silver vault, it's like a ski hill straight down, right? And the same thing is true, only slower, on COMEX, and the same thing is true right now on the Shanghai Metals Exchange. So these countries are buying Western gold and silver, having it delivered to China, and offloading it off of the exchanges. There is a contract that most people don't know about that was written by the CME Group in 2015 that allows for COMEX futures to be delivered in exchange for physical to Brinks, Hong Kong, which is a COMEX facility, where then that stuff is picked up by a truck and driven to the Shanghai Metals Exchange, where it's offloaded to all of the countries that are buying and taking delivery of metals, including the PBOC. Silver is the value of a generation. You have to have strong fingertips. But this Western suppression, which has been going on for a long time, never had these countries coordinated, sophisticated, wealthy enough, cunning enough to stand for delivery. But they are, and it is the Achilles heel. It's one of these deals where we will wake up one day. If gold continues, if gold gets above 2,500 and climbing, you'll see silver, bang, take off. They can't continue to hold it down. And I think this is just the very beginning. So it's the value of a generation. I mean that in my soul. There are very few assets that are depleting in nature. Keith Neumeyer will tell you it's coming out of the ground at 7-1. After 5,000 years of it coming out of the ground at 16-1. Because it's held in nature in a form called epithermal, like your skin is epidermis, epithermal right at the surface. Big deposits were gone long time ago. So it's needed in military, in green, in digital, in electronics, and it's experienced a monetary renaissance. And yet we're supposed to believe that it's coming out of the ground at 7-1, but it should be valued at 80-1. So God's ratio says 7-1, man's price in the West says 80-1. And I would simply say this. There was a statement made by the head of the Shanghai Gold Exchange in 2014. And I'll throw silver into this equation too. He said, when China is allowed to speak at the table, the real value and the real price of gold will be revealed. Well, the same thing will be true about silver. And Zoltan Pozsar will go down as one of the smartest people ever, who told us all we are now entering Bretton Woods 3, a system about who's got the commodities. And so these countries that are gobbling everything up, well, they're using the suppression that we've been fostering forever against us, where 8 stupid banks can hold the price down of a commodity that is massively acquired and needed, distorting its real value forever, as dumb as a mud wall. Why? Well, there's your why. Because it's needed to fight wars and build high-tech weaponry. So yeah, the most undervalued, underappreciated, best value of anything I've ever seen in 35 years of finance.
Hey guys, just a quick break to hear from today's sponsors, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. So if the military use of silver obviously being massively underestimated in your view, could the solar demand, the photovoltaic solar demand, be over-exaggerated? Because you spoke a little bit in our last interview about the scam that is the new green economy. Now, solar doesn't work. It's, in my view, I've talked to some people who believe the contrary, but if we're going to go carbon free, which I don't necessarily also think makes sense, nuclear energy is really the way to go. However, that doesn't mean that these, what I would call psychopaths or sociopaths in charge, are not going to push forward and subsidize all of these solar projects and get these solar build outs done, regardless of how effective they're going to be in the end. So my question is the silver for solar demand. If the new green agenda collapses and people kind of realize that okay, we can't power generators and we can't power a grid correctly without a base load source of energy, do you think that could crater the demand for silver when it comes to solar power specifically?
I think that solar power is kind of a ruse in the respect of what they're trying to tell us all the silver demand is coming from. I mean, look, if you look at the demand numbers, industrial 9%, electronic and electrical 9%, brazing alloys and solders 3%, other industrial 9%, jewelry 4%, silverware 7%, and photovoltaics, which are the panels, 20%. They're telling you it's by twice the biggest demand center for silver. Now, look, the in China, we just saw a 5 gigawatt solar power plant come into commercial operation. It's the biggest in the world. So there is some demand certainly for it, and it's real. But I think, in essence, the real demand for silver is in high tech aerospace, submarines, and high tech weapons. If 500 ounces or a mint box of Silver Eagles in the tip of a Tomahawk cruise missile, how many have we fired in the past few years? How many have all of these countries in wars fired? How do you make them without it? So I think cratering a demand for silver ain't going to happen because it's disappearing in nature. It went from 16 to 1 to now 7 to 1. It's disappearing because all of the large, so much so that only 25 to 30% of all the silver mined last year came from companies like Keith Newmeyer's who mine silver, like First Majestic. That's 25 to 30% of 100%. So that means 75% came from other places. Why would that be? Majority comes from byproduct mining companies who are never looking for silver and just stumble across it as they're mining some other metal, some other asset. So it's so hard to find that there's only a handful of real silver companies because it's so hard to find. And so, no, I honestly, Jesse, I think that while it's a valid question, I think it's misdirection. And yeah, solar panels are real, and it does take certainly a certain amount of silver to do this. These new panels take twice the amount as the old ones. But yeah, I don't know to what degree solar will be powering the major cities, other than to say, you have the biggest one in the world that just went operational, taking over as the world's largest operating photovoltaic facility. So there is some truth in it, but to believe that is by a factor of 2, double, that's the largest demand source for silver. No, that's not. I don't believe that is. But I also don't think it will crater it. I just think there are too many uses for silver that are growing by the day that we're not really privy to. And so, no, I think it's the value of a generation.
So what are you seeing from the retail demand side at Miles Franklin? You have a pretty interesting perspective and unique perspective on the market from your position there. I'm wondering what you're seeing when it comes to U.S. demand, because I'm hearing out there that U.S. demand is a little bit weak, but we're seeing a lot of the retail buying coming from India and China in particular. Are you seeing the same thing? If so, could we start to see the Western retail buyer come out in full force eventually? And could that kind of provide another leg up in the silver bull market?
Yeah, I mean it's been shocking. I mean for the last 6 months, the lack of Western participation has been shocking. The drawdowns in the ETFs, even though some of that would be delivering metal, taking delivery out of the ETFs for the authorized participants, but the drawdowns in the ETFs, the lack of investor demand in the West has been startling, and albeit it represents a very large proportion of those sales that we do. Now, don't get me wrong. Last year was our biggest year by far. Now, you take that out of the equation, we're still on pace to do better than every year except last year. And 2022, 2021, 2020 were huge years. It's not completely, totally been abandoned. And almost, every single order we do has in some capacity has silver in it. But it's nowhere near the allocation it should be. Rick Rule talks about it all the time. If you take the entire financial matrix from Joe and Jane Sixpack to the Harvard Endowment Fund, that allocation is less than 0.5%. So, yes, it's very small, but I will tell you that if something happens, a bank problem, commercial real estate leading to bank bail-ins, which most people don't even know is written into law in the Dodd-Frank Act, because Silicon and Signature were bailed out illegally, as the subcommittee hearing with Janet Yellen and the Oklahoma senator paid homage to. But people don't know that if a bank fails, a big one, it won't be bailed out anymore. It will be bailed in. The amount of fear that would create. We added 14,000 clients in 45 days when Silicon Valley Bank and Signature Bank failed, and they were illegally bailed out. Evidently, it was an uber majority vote between the FOMC, the FDIC, Janet Yellen, and the president, because they were too systemic. But when asked, would this happen again, Janet said, not unless that same thing happens, where it's a majority uber vote by all of those parties involved. Otherwise, they will be bailed in. The other banks that have failed have been gobbled up, consolidated with JP Morgan and others. That won't go on forever. And you see a big bank fail and is bailed in, where everything over FDIC goes to bail in the bank. In other words, 250,000 or 500 if you're a couple, it's gone and goes to bail in the bank. The amount of fear that would create, like that, you would see a rush into precious metals that would bankrupt the availability of supply within 24 hours. It's a very much a just-in-time business. You can stock up as much as you want, but there is a cost for buying large amounts of inventory, holding it, financing it if you don't have the cash, and even if you do, the cost of carry of that sitting in your warehouse, and then you have to hedge it, and all of the things involved with risk and risk mediation. And then you talk about the high premiums that we've seen over the last several years that you can't hedge that premium. Premiums have come down a lot now. You can hedge the metal content, but not the premium. And those have come down to where prices are very attractive. It will go down to me both as, I don't know, a mystery why people don't see what we talk about. Maybe it's because they can't get out of the way of what they never see coming because the media doesn't talk about it. You got to go to alternative sources like you and me to find this information. But I will also say it's probably the biggest contrarian indicator of my life. At the same time, the most well-funded and more relevant, the most well-informed traders in the world, the central banks and sovereign wealth funds, are buying hand over fist. The American public has their thumb in their rear buying Apple and NVIDIA and Bitcoin. Not saying there's anything wrong with those things, but what I'm saying is instant gratification is not fast enough for the American public. This is too boring for them. It's too volatile. It's too counterintuitive. You better understand what you're doing to take a position in gold and silver. And if you do, it becomes very obvious that over time, gold and silver will assert themselves in a way that most people will be shocked when it finally happens. It's easy to dismiss a market that is counterintuitive and does not move in any speed, if you will. But I think that will be a big mistake. The underestimation of how important silver and gold are and how important they are to people's portfolios will be a very big mistake for those who never realized it. So yeah, again, just beginning, Jesse. And I think things will start to accelerate as we are getting later in the hour in this Keynesian system and this dollar-based debt system, which I believe is getting very late in the game. You'll start to see this become more evident, and certainly gold leading the way here, busting through all-time highs again at 2470 almost as we speak. Bodes very well for silver's future performance.
Absolutely. Now, central banks have been accumulating gold at a major pace. They have not, to my knowledge, been accumulating silver in the same way as well. Large institutions, hedge funds, endowments, as you mentioned. You talked about the amount of silver that's actually allocated in investment accounts across the board, less than 0.5%. What would it take for a larger institutional player to see what you're seeing? Do you think there's nefarious activities going on behind the scenes in terms of the suppression of the price, where the bullion banks and those involved are telling these big institutions like, hey, you need to stay out of this game. We need to keep the price down. Does it go that deep? Or is there the possibility of institutional players realizing the value that you're seeing in the silver market and getting into the game in a big way?
Well, I think that is possible. But if you look, there's a company right now in China called Zhongkai Futures. I'm sorry if I butchered that name. And Zhongkai Futures is, I believe, a proxy for the PBOC. And they are challenging like JP Morgan. They have massive long positions and they're making a fortune. Their stock price has doubled in the last year or less, and they are making a fortune by standing for delivery. And as the price goes higher, as of last week, they had 31,000 long positions in gold with a margin account of 21 billion yuan or 31 tons of gold, and massive long positions in silver as well. Silver is being drained by all of the exchanges around the globe by these very, very big players who are pushing back against what you just said. We just saw 5.71 million ounces in the first days of the August contract taken off of COMEX by a customer account called PTG, of relatively unknown who the hell they are. And then we saw the weekly inventory report off the Shanghai Gold Exchange showed that 215,355 kilograms of silver were taken last week off of the Shanghai Metals Exchange. That's 7.6 million ounces. That's the weight of 60 adult African elephants or 108 cars. This is something that is happening. And yeah, I do think that to an extent, there are some players that may have been asked politely to cash settle rather than stand for delivery. But there is no question, none, that the price of silver is being wickedly manipulated. And as I said earlier, 8 banks hold the largest concentrated short position in any commodity ever traded on COMEX. What the hell for? It's a tiny little market, and it's done for a reason. Yes, the real price of silver, no one has any idea what it truly is. And I don't think anyone has any clue how high this will go, but my feeling is higher than anyone thinks possible. Look, just right now, if you take gold at 24.62 and divide it by 42, that's the average price that we've seen for the past 100 years. Sorry, let me try that again. That is 24.62 divided by 31.30. That's $78.60. That's where it should be if you use the average price. Take the 24.62 and divide it by 7 when it's coming out of the ground at, that's $352. So silver should be way, 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 way higher. And I think before it's all said and done, as these nations, and India, to your point, is accumulating silver, over 700 million ounces they've bought in the past couple of years, and from the West, right? And that's 11 times, 12 times what the COMEX registered category has right now. If we believe the LBMA numbers, where they say they have 800 million, of which 300 million belong, or 500 belongs to the ETFs, 300 is available. Well, that's 2.5 times what they have available. And just recently, India's silver imports from the United Arab Emirates went from $2.2 million between January and April 2023. That's it. That's all the import was, 2.2 million, to 1.44 billion over the same period in 2024. That's a 654-fold increase in 1 year because they are able to import from the UAE without the high tariffs. Silver is being accumulated by countries. China, as I mentioned, is the second largest producer in the world. They're just not talking about it because gold is the only other tier one. And to think these countries want to be upfront about what they're doing in a strategic, critical asset like this is stupid. How about the U.S.? We haven't updated the world to, or even showed the world or audited for the United States benefit, our own people, our own gold that's supposedly held at Fort Knox. These countries are not going to be transparent about what they're doing. But I assure you, India being the only one who's relatively transparent, these countries are buying the hell out of silver too. And this is why you're seeing all of the drawdowns on all of the world's exchanges, which is a very dangerous game to be playing if you are a Western bullion bank, because for the first time, like that company that I was mentioning, that it's hard to pronounce its name, Shanghai or whatever. I mean, that is the Chinese government, and they are standing for delivery, and they are every bit as powerful, if you will, as the bullion banks that are borrowing from the Fed at lower rates than the hedge funds, who typically are on the other side of these trades, borrow from the market and have much deeper pocketbooks. Now they have a very formidable foe, if you will, standing for delivery, which is what is really different now, Jesse, than in any time before. And that's how you win the game.
I was watching some videos on silver on YouTube in preparation for this interview, and I like to scroll down to the comments and see what people are saying. I found this very interesting comment by a user called Keep on the Right Path. He said, "The problem with silver is that it is mostly a byproduct of zinc, lead, copper, gold mining." You mentioned this earlier, and not a determining factor of project economics in a lot of cases. This is one reason the price is low. Having said that, as demand increases, the silver miners will start to play a critical role in the supply, but replacing silver to make silver mines economic, or repricing silver to make silver mines economic, will be needed. Why do you think China is gobbling up silver at an alarming rate? I wonder what your thoughts are on that.
Yeah, I mean, that's exactly what they're doing. And I mean, look, gold is held on every central bank balance sheet in something as ironic as the gold revaluation account. That's the name of it. They will revalue gold, and by proxy, they will revalue silver. And I think it's right. I mean, to some degree, silver is being revalued slowly in China. They've already got it $4 an ounce higher than in the West to arbitrage whatever isn't nailed down. That's why they're buying gold mines, silver mines, oil refineries, all of these commodities they're buying because they're critical. And all of the deals they're striking on the Belt Road, with which amounts to 75% of human population already, 50% of global GDP. All of the countries on there are resource rich and underdeveloped. Look at the countries that they're inviting into BRICS. They're all massively resource rich, and most of them underdeveloped or have very key shipping lanes or trade routes within their borders or around their countries in the shipping lanes of the oceans. Yeah, it's huge. And, look at Peru. They're part of the Belt Road, the third largest producer of silver in the world. Mexico said they're interested in joining BRICS. They haven't done anything about it. The first largest. Number two is China. Jim Willey, a guy who I put a lot of faith in, although his takes are sometimes very controversial, but often very brilliant, and oftentimes very much before anyone else, says that they are trying to put together, China is a OPEC style cartel of silver producers around the globe. So yes, these countries understand that silver is depleting in nature. To his point, is mostly found in byproduct metal, mining, meaning the companies that mine it all together can't find it, or it's too expensive to pull it out. Why do you think China's making a big deal about it, and India making a big deal about it? Of course. And that's why they're not going to be overly transparent in what they're doing, because this is, every man for themselves, if you will. So, yeah, I think that's exactly why China's going around the world buying as many silver mines as they can, because it's disappearing and it's needed, and its value has been masked by the Western suppression. And that Western suppression has given all of these countries who are now wealthy and sophisticated. They were third world 25 years ago. Now they're wealthy, sophisticated, coordinated, and pissed off. And they are doing things methodically and using the suppression of the Western paper markets, the stupidity of the Western markets, to drain the exchanges of all the world's commodities and to buy them at subsidized prices. And once there's no bid and the Western exchanges are exposed for what they are, fraudulent, rehypothecated Ponzi schemes, then you will see the Shanghai Metals Exchange, the Dubai Metals Exchange, the Moscow Metals Exchange, all of these exchanges in the East, the South, well, they will take over for the COMEX, the fraudulent and disgraced and discredited fraudulent COMEX and LBMA. And, it's not just precious metals. Look, the Chinese bought the LME, the London Metals Exchange, all the base metals. whereby those metals are mined and they find silver. Well, they own that. And, they're going around the world in the Belt Road, in the BRICS, buying all of these commodities and mining them in their own countries. They are the number 2 largest producer of silver in the world, the largest producer of gold in the world. So yeah, it's real. And I think the Western suppression of price and the rhetoric, the antithesis, if you will, of Wall Street, this Wall Street rhetoric, which shuns gold and silver. Gold has outperformed the S&P 500 in every asset class on the planet, with the exception of Bitcoin, since 2000. It's averaged 9.9% per year compounding. It's beat the S&P 500, even with dividends reinvested. That amounts to about 9.5%. Gold's at 9.9, and yet no one notices it and discredits it. It's the tortoise, not the hare, and it has no counterparty liability. Read The Great Taking by David Rogers Webb, and you'll understand what counterparty liability is, or just look at what we've done to the Russians by stealing their $5 billion in treasuries. It's a default. And so, yeah, Jesse, silver is the most undervalued asset on the planet. It is the opportunity of a generation. And I don't say that lightly. So the price is the greatest tool of misdirection. The fundamentals, if you are able to do the digging and spend the time researching, not going to find it easily in Western media, but go do a little digging, and I think you'll come away saying, yeah, it's a hell of an opportunity, no question about it.
Well, you're preaching to the choir here, brother. This has been a great couple of episodes with you. Thoroughly enjoyed spending time together discussing the gold and silver markets, as I always do. For those who want to learn more about Miles Franklin Precious Metals, let us know about that, where people can find it.
Yeah, the best way, as we mentioned last show we did together, is to send an email to info@milesfranklin.com. Jesse sent me Commodity Culture just so we know where it's coming from. Ask any questions you have, whether it be on the first part in gold or this part in silver, precious metals IRAs, you name it. Ask for our price list, which we don't publish online, which will be as competitive or more so than anyone in the country. We hold close to the vest. If that's all you want, great. If you want questions answered, put your phone number in there. We'll call you. Of course, there is milesfranklin.com. Our new website is coming out in probably 2 weeks, which will be far more user-friendly for purchasing. But again, we're kind of a hybrid, and I think you never realize how important a relationship is until there's a problem. And where we're going, relationships will be important. So we prefer the brokerage model, but we do not, our prices will not be undersold, and nor will our reputation. So info@milesfranklin.com. Any questions, put your phone number there if you want to be contacted, or just ask for the price list, and we're happy to acquiesce any way we can.
Great. Well, I'll put the email along with the website in the description below. Thank you once again, Andy. Had a blast chatting with you, and looking forward to the next time we get together.
Jesse, you're one of the best in the business. I want to give you my congratulations on your achievement of getting, I think it was to 100,000. Is that what it was?
We're almost at 65,000, but hopefully by the end of the year.
I know. Well, I know it was a big milestone, and you deserve it. You are as well prepared and well informed as anyone I ever interview with. It is a true honor to be here with you as often as I can, and I look forward to picking up where we left off here next time. And with the BRICS meeting in October and the election in November, God knows there's going to be a lot to talk about. So I'm just a text or an email away, and count me in as tickled pink, if you will. My dad always says that, to come back on a moment's notice. So thanks for having me, and look forward to chatting with you again soon.
And thank you for joining us today. This episode is sponsored by ARC Silver Gold Osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441, or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you, and I'll see you guys on the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.